Welcome to this live Q&A by Paris Trading Academy. I was supposed to do a live trading, but we have some technical issues, so it will just be today. We will just do like some review of the news, check the different asset class, and answer some of the questions that people ask us. So if you have any question, do not hesitate to ask them in chat. I will do my best to answer them. And yeah. So if we look at the news for the day, mostly one of the big news was yesterday OPEN's meeting, or like the OPEC meeting. So to just a quick reminder of what is the OPEC. So the OPEC is the Organization of the Petroleum Exporting Country. So it's if we look at the member countries, we can see that there's Saudi Arabia, Iran, Iraq, Venezuela, Kuwait, Qatar, Indonesia, Libya, the UAE, Algeria, Nigeria, Ecuador, the 13 members of the OPEC organization. And sometimes they invite Russia. Is that they collaborate in order to control and to control the price of oil. And yesterday they made like they had a meeting where they decided to basically reduce, like to control the supply of oil by limiting their production, either by Saudi Arabia, who decided to cut 1 million barrels per day, and Russia to reduce its export by 300,000 barrels per day until December 2023. So it slightly pushed the oil price back up, but from then it went a bit down. Then, so that was one of the big news. Another one, like one of the news of yesterday. Another news we had was we had like the PMI, the US PMI by S&P, like by Standards and Poor's, that was basically more or less same as anticipated by economists, and that showed that mostly the US economy is supposed to remain stable in short term. Although on top of that, we had the oil inventories, which are a good representation of oil demand in the US. And also we had the ADP non-farm employment change, which basically showed the creation of, which showed that there was only 90,000 new jobs that were created in the US, and it was expected to be 153. So that would, so that's quite important news, because we have the official by the government, like the government issued statistic about employment, about like non-farm employment, that on Friday, and those are key indicators for the Federal Reserve concerning for the monetary policy, because it's a key tool the Federal Reserve is using to calculate if the economy is growing or slowing down. So that was more or less all of the news for today. So not really very important news, even though the ADP non-farm employment, which is quite important, as well as the OPEC news. Today, well, it's yeah, internet is a bit difficult still. Okay, nice. Okay, so while it's loading, it's loading slowly. Okay, so today we also have several important news that came out. we had like the weekly jobless claim, which are a bit less than anticipated, but more than last week, sorry. We also have the trade balance for the US, which is quite important for the value of the dollar, because basically if people are importing more things for the US than they are exporting, then the demand for dollar is higher than the offer for dollar. So that's quite quite important if you're trading forex and more especially USD. It's gonna like give you information on whether the demand for dollar is getting bigger or slower. Also, tonight at 10:30, we've got the Fed's balance sheet. So last month, I think, it's last time, not last month. Last time we had the Fed's balance sheet, there was a their balance sheet reduced by $20 billion, so 20,000 million, and and so it shows that basically they started a cycle of quantitative tightening, but not necessarily just by the increase of the interest rate. Also, we are at the moment in the middle of what we call earnings season. Yeah, like I said, so while earning calendar is loading. So tomorrow we get like several very important statistics. We've got unemployment rate, private non-farm payroll. We've got like a lot of important statistics about labor force in the US. And that are key statistics to look at and anticipate to anticipate the monetary policy. So as we see, there's like a lot of from today, there's a lot of results. We've got PepsiCo next Tuesday. We've got BlackRock next Wednesday. That might be interesting to watch. We've got Best Bath and Beyond if you're looking at, if you're from Wall Street Bet. So basically, it's quite important to follow the earnings, because when you're trading, earnings are going to have a huge effect on a company's valuation, and it's in general a period of high volatility. So it's always you always need to be careful during earnings, because like if a company vastly exceed expectation, it's gonna have a huge effect on their value, and if they miss it by a lot, it's gonna also have a huge effect. So then for next week we have JP Morgan, Wells Fargo, Citibank, so a lot of banks next week, including First Republic Bank, which was in trouble in March. We've got Bank of America, Goldman, First National Bank also. We've got Tesla, Netflix, Procter & Gamble, Morgan Stanley, State Street. So really, actually, a lot of results this week, next week. So it's gonna be like there's gonna be a lot of volatility on equity market next week. So it's quite interesting, and you need to be careful with that. If you don't if you don't follow like the result, if there's like a good or bad result, it's gonna have like you can be sometimes surprised by the way the market move, even though your fundamental analysis was otherwise right. If we look quickly next week on the economic calendar, while it's loading, so we see OPEC. So here you see, if you look at the news, mostly they talk about like results, Biden's dog. So really not really interesting. So we see next week we have 10 years not auction, so that's going to be interesting to see because 10-year yield has been on the rise lately. We're going to have trade balance of UK trade balance, so some UK statistic. We're going to get CPI, so that one is very important. We're still going to have jobless claims, so that's next Thursday. But we've got 3-year not action in US. We're going to get PPI and core PPI, which is also a really important measurement of inflation. And we're gonna get like some Michigan prospective statistic as well. So all this information. So next week or so we're gonna have some very important economical statistics. If we look at the Fed, we can see like the investing Fed rate. They like it's slowly rising compared to previously. Like I think this morning it was 2080, and previous one. But basically they're not so sure. They know that the Fed is most likely gonna rise its rate until the end of year, but they're not sure if it's like November or December. And if they're gonna raise it by a quarter of a point or by half a point. So if we look at the asset classes, know that the US market is open. Yes, US market is open. Yeah, voilà. So we can see that basically Nasdaq, like the future, basically on equities, either like, well, actually equities are have mixed signals. Some of them are in the green, is Asia and European except DAX. But if you look at French one, Euro stock, like at CAC 40, Euro stocks, on DAX, they're more or less around around 0%. So basically, they're not moving a lot today. If we look at the Dow, like opened in the red, by basically a third of a percent. But we don't really know if that's gonna hold, because if we look at the bond yield, we can see that basically, like it's been a few days that it's been coming back down. But if you look more on a longer term, you can see that the yields are like actually pretty high. 5% yield for US, France and Germany one are going down, except short-term one that are like really increasing. Bond is slightly going up, but the Euribor is going down and the SOFR is not moving. Same for the SONIA. Otherwise, if we look at currency, we can see that Euro USD has been coming back up from previous low that was at 10.48, I believe, like 1.048 euro for dollar for a euro. Now it's 1.0552 dollar for euro. So it's coming slightly back up, and those two, like the fact that the US yield have been going up almost non-stop since July, maybe even a bit before. Yeah, since like at least 2 years. Let's look at the 5 year yeah. Since COVID, we can see since COVID it's been only going up. It's slowly slowing down, but it's still going up. It's the same here. If we look at the 10-year bond yields. So clearly, yields are like bond yields have a clearly direct correlation with interest rate by the Federal Reserve. We can see, and if we compare with the graphs that shows the, yes, let's show the rates. We can see it's basically the same. This is going up, this is going up. Here, like it started in 2022, it started going up, this started going up. So basically they're directly correlated. But if you look at bond yield, and so let's look at 3 months. And the S&P, or the future of the S&P, it's basically the same. You can see that they're basically kind of inversely correlated. It's not perfectly, it's not a perfect correlation, but there's a quite strong correlation. You see, this is going up, this is going down. And why is that? It's because if you look at the big player in the market, so BlackRock, State Street, Vanguard, etc., what they do is they provide their customers with, they try to provide their customers with the best return for the lowest risk. And if basically you can, in general, expect equities to give you a 7, maybe 8 or 9% return per year, but with a high risk. Meanwhile, US government bond tends to be considered extremely low risk, even though there's sometimes some risk, like last time where like in June, where there was there was talked about the US defaulting, but generally the US doesn't default with the debt ceiling. The US doesn't default on its debt. So it's quite important. So basically what they do is that if the bond yields are high, what the big player will do is that they're gonna sell their stock to buy bonds. And therefore they're gonna put the price down and the yield up. So either by private message, mostly by private message. By the way, don't hesitate to send us message by private or in the chat, and we will do our best to answer them either next stream or directly to you. So the first question I had was, where do I find a central bank speech? Well, there's several ways. For example, if you look at the Federal Reserve, and also you can find them on YouTube. I'm gonna so on the website of either the European Central Bank or the Federal Reserve, like if you look, there's press release, a speech. And if you click speech, you can see each of the speech by the of the central bank. You see here exactly like on the. So it's not necessarily always on the central bank website. Sometimes they speech at other event, and then it's going to be on the event. Find you can always figure stuff. You can always, like, you maybe have to search a little bit, but you can always find them. So another things, another question that I've been asked is why on the economic calendar sometimes the statistic shows in green as a bullish signal, and the market react to it by going down. Well, there are several reasons for that, but you should always put it back in context. And in today's context, if there's economic expansion, so basically less unemployment, more bigger salary, etc., then the central bank policy, the monetary policy by the central bank is gonna be more hawkish, which means they're gonna increase they're gonna raise the rates, they're gonna sell some of the assets on their balance sheet, and therefore it's not it's bad news for the market. Hence, why sometimes the number shows in greens and the reaction is of the market is going down. Another one of the question, I get that quite a lot. This one quite a lot. It's I do swing trading. Is it interesting for me to learn how to do scalping? Well, the answer is yes, and there's several reasons. The first one is scalping is fun, but that's not the most important one. The main one is that scalping is actually harder on some point than swing trading. It means because in scalping you need to be to have a precise timing and accurate entry point and exit point. You can't just use indicators and say, okay, so you need to be more reactive and more precise. You need to be faster than the indicators. And therefore, so that means that you need to be more precise trader when you do scalping. On top of that, the skills you learn while you learn scalping, they are translatable to swing trading, because basically in scalping you're gonna need to do you maybe won't be as much of a technical analysis on trends and etc., and more you're gonna need to use some different thing, but you can't you can translate the skill we use in scalping in swing. Meanwhile, the skill you use in the swing are not that effective in scalping because of lag effect. That's why, for example, if you look at trading contest, order flow trading tends to be the most efficient one. Also, scalping allows you to use very high leverage with relatively reduced. I'm still up. So it's the second time that it's cut. So one other question we get a lot is where are you located? So far we have two trading rooms, one in Paris La Défense in the Curve, which is 48 it is basically just next to l'Esplanade de la Défense, and the other one is in Dubai in the Citadel Tower, and that's Dubai Trading Academy. So that's where we are located, so don't hesitate to come visit us. Right, at the moment Hassan is in Dubai, so you can also, and yeah, that's it. Another question I get asked a lot, or comment more than a question, is trading is just gambling. And that's not true. Trading is not gambling. If you're equipped with the proper tool set, you can anticipate and predict the way the market moves, and therefore you're not gambling. It's not about, it's not random. Maybe sometimes you're wrong. Actually, sometimes you're going to be wrong, but that doesn't mean that the market is moving randomly. It's moving according to a set of rules and a set of criteria, And it's your job to be able to analyze them and determine which criteria are and which criteria there is. So another one of the questions we get asked a lot is, what type of training do you offer? I'm actually gonna record this one. Okay, so I'm not, because it doesn't want me to record. So what we basically offer three training. The one is called initiation. It's 1 week. It's cost 1,500 euros in on site and 999 euros on online. And it's gonna provide you with all the theoretical knowledge you're gonna need for trading. So what is financial? What are financial market? How do they work? What type of asset you can buy? What type of product you can buy? How to do technical analysis? How to understand macroeconomic decision? Some microeconomy, some economic basis. You're going to learn technical analysis. You're going to learn risk management. You're going to learn how to read and understand an order book. And also a little bit of asset management, because it's still relevant. Then there's a second one that's called improvement in English, or perfectionnement in French. It's 2 weeks and it's 2,995 euros. It basically includes everything you learned during the initiation, and it adds 1 week of supervised practice with our professional trainers, so me, Hassan, Brahim, and basically we are gonna put in application everything we learned in the first week. So how the market move, can we anticipate, what is technical analysis, how do we use technical analysis to create to create trade plan, etc., etc. So that's the second one, improvement. The third one is called expert. It lasts 5 weeks. It's 6,500 euros. It's open. It gives you the opportunity to get a diploma of cryptocurrency trader level 3 or level 5. And basically, it includes everything in improvement. Then it had another week of supervised practice, and then you'll get 2 weeks of the closest possible to real life test and evaluation, where basically you have 2 weeks to do like $6,000. And basically to pay back the training, and in 10 days. And the goal of that is to put you in the most realistic conditions, so that you're not surprised when after the training you start trading and you realize that there's a lot of pressure, it's difficult, sometimes I need to be patient, that's the mistake I make, I shouldn't make them, etc., etc. So to get you the most ready we can for after the training. Okay, I'm back. So we had some problem with, we still have some problem with internet, that's why it keeps cutting. I hope at least the sound is clear. And so I'm gonna thank everyone and be glad that you, thank everyone, remind you to please like and subscribe. I hope we'll be able to fix that problem quite fast, because it doesn't start to be annoying, it is annoying by now. And